Can you hear me, guys? Hello?
Yes, you are audible.
All right. So, can you see my screen now?
Yes, I can see. Guys, please just respond to him if you are able to see his screen or not.
Okay, you
So
can
I
see my
see.
chart, right?
Yes, can see.
Okay, you can see my chart. All right. So, just smart money concept, SMC. All right. So, what is smart money concept? So, we will be dealing with this. I guess you can hear me, right? I
Yes,
don't know if you
perfect.
can see. Okay, okay. So smart money is nothing else because the bank and the institutions, they will be moving this market. They will be moving the market. Why it is going up? Why it is going down? Because we are retail traders. That means we don't have enough money to move even this one candle, this one candle. So everywhere they will be involved, and they are generally, we can say that there is a composite man behind all of this. So, composite man is not just one entity, but it can be uh, huge banks, private banks, and even government entities and hedge funds, institutions, all of those combined, and they somehow follow the same uh, method. So they move the market, and we're just behind. So that is why sometimes I talked about news. When there is a certain good news on DXY, the market is supposed to be going down, but then it goes up and then it goes down. So it's not always the case, but the point is, even on the good news that we are expecting something else, they can just manipulate the market. They can move in a way that they want this to move. And that movement is what we will be studying, because that is when they make these moves, when they do this movement, they kind of leave their footprint. So those footprint, we will study how they are moving, when they are going to move, and those are basically what is this we call smart money concept. And first thing that we need to understand is this term, liquidity. So let's talk about liquidity. What is liquidity? These are just liquidity is just the orders in the market, because what they generally do, the well, let's say the big boys, right? The institutional traders, what they do is they are not looking at, okay, there is a inverted hammer here, or so we will be buying. So they don't do that. They don't actually look at the candles. They just go from a place to another, a place to another, to a place to another, where there are orders. So these orders are what? Those are the orders that we placed, or other banks place, or smaller banks, or smaller hedge funds. Even they get manipulated by the big ones. So those, they will be going from orders to orders. So here the liquidity, let's say that let's say for example here I'll just draw a trend line. You guys can hear me, right?
Yes, can hear you.
Okay. So for example, you can see this trend line. I'll just draw this trend line here. So what it is here now, at this very point, and at this very point, we don't know that there is going to be a channel. There is going to be a trend line that would be forming like this. I'll just move to another. Okay, give me a moment. So I'll just move here where I don't have my markings. Okay, so here we'll just draw a trend line. Now, when they made this move and they're coming back and they're making a move here, we don't know that this is going to be a trend line now. So, but now after, at least we need two structural points to make it happen. So now what do we see? One, two, three. So this becomes a liquidity because once this is formed, after this is formed on the third one, there will be people looking at this trend line. There will be people who will be selling here. Same goes with here. So what they do when they sell, they put a sell order here. They will be selling here. So when they sell, they will be putting their stop loss maybe above this structure, maybe above this structure, or maybe just above this trend line. We don't know. So the point is, there's multiples of orders now above here, above here, above here because of the stop losses. And at the same time, there will be people looking to buy this breakout of this trend line in the form of maybe a buy stop above this, a buy stop above this, above this, above this trend line. It may be anywhere. So now there is tons of orders that exist in here just alone. And this is a 1 hour time frame. We can go to any time frame and we will find this. So what happened is here what they did, it make it like it's going to move down. So maybe some of them got profit here or maybe a break even, and eventually what they do, they take out all the liquidity here, they take out all the orders here, they take out the sales, the stop losses. What they do, stop loss above here, above here, above here, they take out all of it here. See, they took out all of it, and what they do, pull it down even lower. Why? Because now those people who have bought here, those who had buy stops, they will be having stop losses somewhere here, 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 even below here. And what they do, their intention was to move this market higher. But before they do that, what they do, they bring it down, take out all the stop losses again. And then they just push it up. At the same time, people will be thinking that, okay, it's coming back inside the trend line now. Maybe it's time to sell again. So this is the manipulation they do. This is the liquidity creation. So first things, most of the liquidities, they will move in such a way that it fulfills some kind of I will write it down, imbalance, inefficiency, or they will move from order blocks to order blocks. So I'll just write those down. Okay. First
Olympus,
one
I
was,
guess maybe they. Hello.
yeah.
I personally think maybe they are not able to understand it fully because they actually, some of them maybe they are not aware about OB, what is order block, what is liquidity and imbalance. So I think first you should go for terms only. What are the terms and
Yes,
what
brother. I will
exactly
be
means
going through all of those only.
right?
I'll be explaining what are imbalance, what is that, inefficiency, and what is the other one? We have OBs, right? Order blocks.
Right. You can tell everything, na? Imbalance, OB, mitigation, and maybe POI, AOI, and all.
Yeah, yes, we'll come to that definitely. So we'll go again about this liquidity. First, go to cover all of this. So here you can see all the liquidities here. I'll just remove this trend line. So again, this is again a liquidity creation. You can see here, here, here. The same thing goes with here or even here. Same goes with this trend line, this trend line. It can be this, this. Just take an example here. What do? We have made this trend line and now it looks like it just shoot up from here. So probably people will be looking to buy this trend line when it comes here. And what it do, it has to take out those trend line buyers. So eventually it comes down. So it's not that it's not always going to work, this trend line, buying a trend line or selling a trend line. It will, but it has to come with the knowledge of structures. So we'll go through with that also. So this is just a rough idea about what is liquidity. Liquidity is nothing but where the orders lie in the market. That example, this trend line, how it became a liquidity, because there is orders here because of selling, stop losses, buy stops, all that. I guess you understand this buy stops and everything, right? Buy stop is generally when we expect a breakout, maybe from here or through this channel. We can just made up a channel here like this. So let's say that yeah, so let's just look at this. Now I think it will be clearer. So here now we have a what is this? Some kind of a wedge, ascending or something triangle. I don't know exactly. So here
Yes,
we are
this is
expecting
pennant.
certain what
Pennant.
panel.
Pennant,
Okay,
pennant.
so here what we're expecting a breakout either here or here. Like you can be expecting like this or like this. That's what we'll be expecting. So what happened here is now when this gets to here because of this trend line, we sold here, we bought here, we bought here, we bought here, we sold here. Tons of liquidities, in the sense there are orders now. Buying orders, selling orders, stop losses, buy stop, sell stop, both here. So that is why there is a breakout to grab all of those, and generally why it goes a breakout like this and why it comes back again. That is this covers an imbalance and inefficiency. I'll explain it as well. But I guess you guys understand the meaning of liquidity now, right? If not, I will try to explain again. Please just let me know if you understood this liquidity.
If you have any doubt, just ask him again. We'll try to tell you.
Guys, please please feel free. Just you can ask anything right now. You can ask if you don't understand. I'll try to dig deeper on this because I don't know where you stand. So we'll try to explain again if it's necessary. And if you go through without understanding this basics, you won't be able to understand that the things that we will be covering.
Guys, you understand what is liquidity, right? Just be interactive, right? so that we can be sure that we are at least learning well.
Because without understanding all of this, we won't be able to have our setups. We won't be able to find the things that I'll be sharing, like how to enter, how to snipe, how to do it in a small time frame, big time frame, how to kind of predict the market where it is going, how
Right.
to anticipate the
I
moves.
think,
So all of those.
yes, Olympus, I think liquidity is a bit different term for basic price action traders, right? So let me just
Mhm.
make it easier for them. Maybe some of them are not willing to ask, maybe. So, guys,
Okay,
liquidity
so I'll
means,
just. Mhm.
okay,
Yeah, yeah. Please go ahead.
so, okay, okay, I'll cover it in 1 minute. So, guys, what actually liquidity means that you know that we have orders as Olympus also told us that we don't have enough money, right? We are retail traders, you, me, and including every single trader in the community and every other community. We all are retail traders, right? So, are you able to hear me? Because I can see my voice is echoing here. Wait, Olympus, just do thing.
Hello.
Okay.
Yeah,
Yes,
Yes,
you're
yes,
yes.
I'm able.
echoing. Even
My
my
voice is it echoing or it is audible properly?
it's echoing.
It, I think
Okay,
there is a
echo.
problem from my end. Olympus, you continue. Let me just switch my
Sure,
headset.
sure. I'll just continue. I'll just go a little bit deeper on this again.
Easier, no?
So
Right.
now let's say that we have this wedge right now. So there is a trend line here. We are waiting for a breakout. And some of us will be waiting for a breakout to buy. Some of us will be waiting for a breakout and a retest to buy. The same way, a breakout below to sell and a retest to sell. But at the same time, there will also be people buying at here, 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 selling here, here, here. And what do we have? So we have people selling here, 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 buying here, 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 in the hopes that if this breaks out, we have a good opportunity. We have a very good entry here. So that's basically what's it's happening, and we can close maybe some of our position on here, and then hold some of it at BE or whatever here. So what do we do? Even on BE, there is an order. That buying that you place is an order. So here are orders, and then there will be stop losses below. There will be stop losses here, stop loss below here, here. So what do we see? In every swing points, in every these are all swing points in one way. So every lows or every high, above every lows, below every lows, and above every highs, there are orders. So these are all liquidities. So liquidity is nothing. This is just that it's everywhere. Liquidity is everywhere. Orders are everywhere in the market in any time frame. That is why market moves, because it's going from a liquidity to a liquidity, from order to order. Without buying, there will be no selling. We have to buy in order to sell. So this points, it marks as all liquidities. Even this marks as a liquidity. This is a liquidity. This is a liquidity. This is a liquidity. This is a liquidity. This all of these are liquidities. But in general, just to see the probable area where price would want to go, where it makes the most sense, because we can never predict the market where it is going. We can never know where and where it will stop. We can only uh, anticipate to where it might go, and that is why there is something called stop loss. It exists so that if we are out, if we are wrong, we'll be out of it. So this is basically what liquidity means. And the definition, as easy as that I can put it, is liquidity is where the orders lie in the market. Where the orders lie here. If, for example, in here, the orders lie here, here, here. So this is all liquidities, lie here, here, here. All liquidity. Everywhere is liquidity. So that's basically what liquidity means. But usually, what we look for in the liquidity is in terms of like a trend line, a wedge, and equal low here, maybe equal high here. For example, here, this is a liquidity now. Why? This is an equal high. It has come up here, here, here. We can say this is a resistance here. So in to put it in a retail way, above every resistance or support, those are liquidities. This resistance that we have above this are all liquidities, because people will be selling here. People will be putting buy stops here. The sale, the stop loss will be here. The buy stops, the orders are everywhere. So this is what basically liquidity means. And where is that? Okay. So we'll cover next imbalance. What is imbalance? Do you see something right here? This was not fair. That market, the institution decided to sell this market here, and it just failed face of the earth just like that. It gave no chance for the buyer to push back. So now there is no balance between the buyers and sellers. And this is not a fair market. This move is not a fair market because there is no balance anymore between the buyer and seller. There is no balance in the market now. Hence, it is called an imbalance. And it is also known as inefficiency. It can also be termed as it can also be termed as either imbalance or inefficiency. So how to spot this imbalance or inefficiency? When there is a certain moves, like a parabolic moves, either it moves ups or down, when there's a certain huge moves, we know that this is because institution is involved here. Without them, without them selling billions and billions of dollars here, we cannot, we retail traders, you and me, retail in the sense it can be any form of trading, maybe smart money or whatever, but we, without so much of money, we cannot move, we cannot make this move in the market. This is clearly an institutional move. So when these moves happen, they leave behind this huge gap before any structure. This is what basically means an imbalance. And the beauty about imbalance is that at some point, if not immediately, but at some point, the institution, they will come back to those areas, to these inefficiencies. They need to come back to these inefficiencies or imbalance to feel or to fulfill those imbalance created, because this is not a fair market anymore. So they have to bring it back. So I'll explain why they need to bring back here. Because what they do before this move here, what they do, they bought here, right? Even to make this little bit of retracement here and even here, they had to buy billions and billions of dollars. They had to invest, they had to buy their orders, buy orders for billions and billions of dollars. So when they make a sudden move like this, they don't have the time to take profit on this. They don't have the time to take out their profit on these buys. So these positions, these orders that they have bought previously, those are in negative positions now. That means they're in minus, they're in negative. So when they make this move, they're in profit. Obviously, they are taking out all the buyers here. They are taking out this trend line buyer here. They're taking out this trend line buyer here. So when they made this move, they made money, but they don't want to lose money. They don't want to close their positions which they bought earlier in order to bring this market down. So at some point, it may take maybe a couple of seconds, it may take a couple of minutes, maybe hours, and it even may take even months and years. But eventually, they have to come and close these positions that they bought earlier. So they'll start buying somewhere, and when they feel that they can close these positions that they hate to buy, and now which they are in negative positions, they need to close that. So they will push the price higher and close those positions. So that is what basically imbalance and inefficiency means, and how to spot those. So here, for example, right here, where is an imbalance? Imbalance is nothing but the area between a wick created here and a wick created here. So for this three candle, let's say the imbalance is this wick right here and this wick right here, right, right here. So this area is imbalance area. This is also the inefficiency that we're talking about. This is the imbalance area. So what they do now, they start coming up to this wick, still not filled. Somehow they fill a little bit, and they came to close all their positions here now. And now the price may be moving down or up, we don't know, but their orders that they had to fulfill here are fulfilled here. And this imbalance area or the inefficiency where they will usually move is to an order block. That's where the order block comes in. So here, this is basically the last order block, and see where the price came. It came back here, exactly tapping to this order block. Guys, can you hear me? I hope you can hear me. I think I might be going too fast. I don't know, but please feel free to speak up. What is imbalance? What is inefficiency and liquidity? We have covered these three so far. And if you understood this, I'll be going through again about this imbalance a little bit deeper again. And if you have any doubts, if you want to ask any questions, please feel free to do so now.
I guess Olympus, you have gone too far, right?
Yeah.
So let's just give them 2 minutes if they are having any doubt. I don't
Sure,
think
sure.
they
You
will.
guys take your time and ask. And if you want me to repeat again, I will repeat these things again.
Right.
So
And
liquidity always before the big move, liquidity happens, isn't it?
Liquidity, even not just the big moves.
Okay.
Liquidity. See, this here is a liquidity right here. Every point that you see, every swing, every lows, these are all
Mm.
liquidities. Because why I say this, you may not be getting the complete picture right now,
Uh,
but if this is a 1 hour time frame,
yeah.
just this candle alone, this high alone, if you move it in a let's say in a 1 minute candle, in a 1 minute time frame, then you will see some kind of structure like a trend line, a wedge, again same thing. I'll just show you.
Uh-huh.
Okay, mark this area. I'll just show you in maybe 1 minute. See, this is the area that this is basically the high that created, right? So
Yeah.
here again, we can see that this, like this, we can see that there is a, we can just create any channel like this.
Okay.
So now
The
Here there are
channel
orders here.
variation.
Yeah. And even inside of this, you can see this channel, you can see this
Yeah.
channel, you can see this channel. Above all this, this is why I say every swing points, every high, every liquidity that is created, it's all liquidity. And liquidities are where price would want to go, where price would want to manipulate, where price would want to grab those orders. Because liquidity is what? It is where the orders lie in the market. Why there is a liquidity here? Because there are people buying on this trend line. People are buying here, here, here. So now there are orders here. So eventually, since this has become a liquidity, eventually it will want to come and grab all these orders. It will want to take out all these orders. It may or may not happen, but that is the logic behind.
Yeah, sir. Got
And
it.
even
Thank
if
you.
you see, no problem. And even if you see this trend line, I'm just drawing like this, but
Yeah.
this was the original trend line, right? This is the high, this is the high. What it did, there is an orders here. It just
Yeah. It
shoot up,
broke.
making a fake, yeah,
Breakout.
yes, making a fake breakout here and then move down. So it has to
Mm.
grade the orders because there will be people selling here. Then their stop losses might be here. It makes
Huh.
sense that their stop loss cannot be just here, but it
Yeah.
can be here or here. For those people
Mm.
who put here, it's okay. They were safe there. But those who put here up just above the structure, they got taken out. And those who bought this thinking that this is a breakout, again, this was a fake move. So, but why did it come out? Because it has to clear the orders here because there were orders above this and it needed to get those orders. And why it is coming down? Because there are orders here. It could have easily gone the other way,
Huh.
but it could have also made this fake structure below.
Thank you,
So
sir.
that is what just no problem. So that is what liquidity means and imbalance. Let's try to find some more imbalance. Okay. Let's say on this move right here, there is a huge move. Again, this is an institutional move. Yeah. Hello.
Sometimes in higher time frame we have a carry,
Higher time frame.
and higher time frame in we have imbalance. And in lower time frame at that area there is no imbalance.
Okay. Yeah. Yes. Yes. I will explain that. So let's just check out. For example, yeah. Let's just take this for example. And this is a 1 hour time frame. So after we spot the imbalance here, we will move down to smaller time frame and we'll see what's happening. So here, for now, here, let's find the imbalance here. Where is the imbalance? When it made this sudden move, so we'll be looking for wicks now. So here, the wicks are, here is one wick here. And where is the other wick? Here. What is happening? Do you see now? The wick is coming till here and this wick is coming till here. So this area is an imbalance. The price is very likely that it will come back to this area to fulfill this before moving higher or coming down lower. Again, if you see, there is also an imbalance here. Can you see? Wick to wick between this. Can you see this area?
Yeah, yeah.
Yeah. So this is again is an imbalance. This is an imbalance. And again, if you see here, the last week is here and the last week is somewhere here. This is also an imbalance. So we know that the bank has to come and fulfill these imbalances, but it's not always the case. The price could easily go from here like this, it can go from here like this, or it may even come all the way down here and it goes like this. But what is happening, they why they are coming back to fill these imbalances? Because they have their negative positions. They had to sell here heavily in billions of dollars in order to push up higher. So they need to close these positions that they had to sell. So they need to bring down. And when they think that it is enough for them to close those positions, when they have enough orders to close them, then they will close and they will move up. So in this case, this imbalance was left, right? This imbalance was left here, but this and this were filled. It came to fill this imbalances. And this is why I said about order blocks. Where it is coming, it will be targeting an order block at all costs. It will be coming for an order block. So before this imbalance could be met, there is an order block here. So this order block protected this price to come lower because they had to move this market higher. I'll explain that later. What is order block? So I guess I just want to include order block because this is getting confused, I think. Why it is coming back, where it is coming back, we understand now. Why? Because there is an inefficiency in the market. There are imbalances in the market that needed to be fulfilled. They needed to be balanced. That's why price often reverse back when there are certain huge up move that they make. That is why price always returns back. And this, we call it what? A pullback. So we know that price pulls back. We know that price moves in such a way like this. But why it is making a pullback? Now we have the answer. It's making that pullback to fulfill those imbalances, those inefficiencies in the market, in order to close their positions that they're in a negative positions. So I guess you understand the imbalance inefficiency area. Liquidity we have covered here. Imbalance area we have covered. Okay, let's just look this on a smaller time frame. Yeah, you guys wanted to know that, right? So I'll just mark this here. We'll move to we'll move to 15 minutes. Now you see, again, you are able to find multiple areas of imbalances here. You can find it here. You can find it from here to here. You can find it from here to here. These are all imbalances, and very likely that this all will be fulfilled. It may not just come up right away, and it does also. Sometimes price will just reverse back within a second and then push down, and sometimes it will just take huge amount of time, years even it will take. But why it is coming up, that is the important that we have to understand. Why price does pulls back, why it goes up and down. That is what I have been trying to explain. Because there are imbalances and inefficiencies in the market, they needed to be fulfilled. So that is the reason. So again, looking back in a time frame, suppose that you have been trading in a 1 hour. Those imbalances are pretty valid imbalances in that particular 1 hour. So you can mark it out in that 1 hour, and if you want to trade in a smaller time frame, you can do so. It does not matter anything, because the imbalances that you see here may be all fulfilled on a 1 second or 5 second time frame. So that is why we stick to a time frame that we trade. You cannot be trading this time frame in a daily 4 hour in everything. You cannot be look for a confirmation. That this thing I will cover later, when to choose and what time frame to choose. And if suppose if you're trading in a 1 minute, suppose if you're trading in a 1 minute time frame, which time frame, higher time frame to look for, to combine those two. So that we will cover later. But the first thing that we needed to understand is imbalance, inefficiencies, why the market comes back, why it moves in such a way it does. I think you guys are clear on this. Can I move on to order blocks now? If you guys are clear with
Okay,
this three.
okay.
Just okay,
Okay.
guys.
Let's move.
Am I audible? Hello. Okay, guys. We'll just move to another topic. So just please make sure you have understood everything or not, or if not, just ask. Don't feel shy of anything. If you have any doubt in previous topics, just come and ask.
Guys, please speak up. Please ask what you have to ask, because without
No,
understanding
we should move on.
yeah, please go ahead. All right, so I'll just move on to order blocks. I think this will be getting interesting now. So for this, I'll just choose a daily time frame. I'll just make something very interesting. Here, I'll just move something like this, and any area I'll just choose. Huh? Okay, we'll just work from here. So this is a random area, a random chart that we will be working. So what is an order block? And order blocks are those areas. Let's say this is an order block here, right here. I'll just draw it out. Should. Okay, we'll just take, for example, this one. Okay, so here, what it does, it finally gives a break of this range, right? Out of this range, it gives a breakout of this range here. So when it does, it gives a breakout from this range here. It tried to break here, it failed. So now what it is, these areas below, all these are liquidities now. These are all liquidities, these are all liquidities. I'll combine everything on this example. These are liquidities. You can see that there is a channel that was formed, something like this. And there is something here like this. And there is something here like this. And here like this. Here like this. Here like this. So all of this are liquidities now. Here are multiple liquidities here, there, here, and here, above here, below here. See, we thought that this is a break of the trend line, and we sold, and what happened? See, and we thought that this is the break of the trend line, and then it's coming down. So much of manipulation here on this very 4-hour time frame here. So much of manipulation is going on here. So in general, we can just look at this block right here that I have outlined in this green block. Again here, if you just see that just above this consolidation phase, there are liquidities, multiples of liquidities above here, because people will be putting buy stops above this here, and people will be selling here with the stop loss here. Same thing, people will be putting a sell stop here with the stop losses here above, and people will be buying here with the stop loss below here. These are all liquidities now. So now we understand that these are all liquidities, and price can be moving either up or down, knowing that on both sides there are liquidities, because every lows, every highs are liquidities. And here where we can see the imbalance, here it is breaking. We are breaking here with a huge impulse here, and now there is an, if you can see, you can spot an imbalance here, right here. So we have created an imbalance here, an efficiency here. If this wick, this would have come somewhat till here like this, do we have an imbalance here? No, we don't have imbalance. This is perfectly filled. We don't have an imbalance here. But where do we have? Here we have an imbalance here. So these are very small things that we should be aware of, because this is why most of the time when the price moves, especially in a higher time frame, we will see that there are wicks everywhere. Why is this wick here? Because it needed to fulfill all of these imbalances and the liquidity. This moved right here. Let's see what it does from in this here. Suppose this is a 4-hour time frame, but if you move down to smaller time frame, you will see that there are multiple structures, trend lines and everything. So here, what does this wick do? It grab all the liquidities below here. It grab, it fulfilled everything, moves up, and it moves up in a such way that it grabbed the liquidity here also. Next candle moves up. Why it is coming up till here? Because there are imbalances in a smaller time frame here. I think I am getting too advanced on here with the small time frame, bigger time frame. We will understand this as we go along with our classes, but this may be confusing or may not make any sense right now. But without even shifting to a smaller time frame, you can actually tell the story what it is happening right here on a smaller time frame by looking at these things. So okay, we'll just go on with our thing. So there are imbalances here, and then price will eventually, very likely that it will come to fulfill this imbalance if this is to go way higher. So we don't know where it's going to go, up or down, but if it wants to keep going, it has to come and fulfill. But this is not compulsory, okay? Sometimes it won't need to fulfill those. If they don't have enough orders, they don't need to come back. They can just keep on moving like this, and then moving like this, and then move. So here we have understood the liquidities here. We have understood that there is an imbalance here. There is an inefficiency here that need to be fulfilled. And if they are likely to fulfill this imbalance, where they are coming, this price is coming to this order block. So what is an order block? Why it isn't called an order block? Because this area that we will be, let's say like this area, this block, it is called an order block because there are orders here. There are multiple orders here. So this is called an order block. When the price will come to fulfill imbalances, it's very likely that it will come to that nearest order block. So let's see how this one goes. So this order block, what is an order block and how to spot them is, an order block is basically the last down move before an up move. The last down move in the sense a down candle before an up move. Even here, is this an order block? Yes, this is also an order block. The last up move, this candle, the last up move candle, that is the upward candle before pushing the market down. So this is an order block. Same go, or so this is why I say every candle is an order block. Every candle. Even this is an order block. 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 Everywhere this is an order block. But how do we spot the right one is where there are imbalances left, where there is a structural point. Because before this was made, this move was made, if just imagine that this was not yet happened and the price is right here. So you could say that this is an order block right here. This is an order block. If the price didn't move up like this, if the price came down somewhere like this, you would say that this is an order block. Same with here. The price move up like this, so there is an order block here. This is an order block. The last down move candle before the up move of the price. That is an order block. So this will come with practice, will come with your back testing. And for example, let's take this one, because here this order block prices never came to this order block yet. Prices never fulfilled the imbalances here. So let's see how this one goes. So here what this is doing, the price, it never fulfilled this yet. It has never come to this order block yet. And what is our anticipation right here? That is, since this is already moving up, when the price come to this order block, we can be expecting at least something like this, or something like this. But what we are expecting that price has to bounce from this order block. That is what we are expecting. And why this bias? Because it gave a breakout here and we are on a bullish train right now. So we are expecting the continuation of this price. We are expecting the continuation of this structure, especially coming out of this huge consolidation on a daily time frame. We are expecting that it has to give us this opportunity to buy from this order block. So let's see if that gives. And we can say that even though this is formed by uh, a black candle, a bearish candle, we can say that this is a bullish order block. It does not matter really what is a bullish order block or bearish order block, but let's see how this plays out. What we're expecting, at least when this price come to here, then we'll give a buy setup. That is how we will be using the order block. And why are we expecting to come here? Why we're expecting the price to come down to here? Because of this imbalance. The price may very well reverse from this imbalance. Price may just reverse, fulfilling this imbalance, but since the order block is very nearby, most of the time it will come to this order block, give you some kind of a confirmation here, and then to go long. Yep, right there. So here you see that it has come to fulfill this imbalance. So now this imbalance is fulfilled, and at the same time, what it did here, it hold this block, this order block held perfectly. So here we have a what is this? A bullish engulfing, I think, but I that's not how I do my entry criteria. I will be moving down this to. All right, guys. Before I continue with this, do you guys understood so far why we did an order block here? Why did we expect a bullish turn from here? Why not wait all the way here? What was the reason? Instead of buying here, why did we wait for the price to come here and to buy? Do you guys understand?
Yeah.
Please feel free to answer.
So to start out a order block, we need to also look for the imbalances, right?
Yes, most of the time what happened is that's not always the case. If there is no imbalance, that order flow, it's not valid. There's nothing something like that. Okay, it's nothing like that. But if there is an imbalance just right above the order block, then the very we have a higher chances that price is coming not only to take that imbalance but also to tap into the order block below. And if you see some kind of uh, confirmation entry, if it gives you that, I will explain how I do, but it will depend on the individual how they want to look for that confirmation. So here I would be moving down to a smaller time frame. I will be looking for Wyckoff for an entry confirmation for me here, so that I do not wait for this.
Imbalances
I'm
always
so
comes with a week.
yes. I mean, yeah, imbalances are those areas where the areas between the wicks. So yeah, it has to be between the wicks.
Ah, okay. Thank you.
No problem. You can just look between candles. Just take three candles and see where the wicks are, and those areas are the imbalances. Even here, you can see where is imbalances. This wick came down till here. This wick comes up here, so there's no imbalance here. But here, you see that this wick came till here, and this wick came up till there. So there is an imbalance right here, if you can see. So this is an imbalance. And here, what do we have? We have an order block here, right here. So while in a bearish order block, what do we look for? The last up move, the last bullish candle before the bearish candle. So this will be the order block. This will be the order block. So that means what we can anticipate it here is price can come up somewhat like this and it gives like this, and then maybe it comes up like this a little bit, gives something like this, and either push up higher, or it comes up something like this and then it moves down. This is what we are going to anticipate with the order blocks. So we'll just so now I guess you guys understand why, even if you miss this entry here, if you were from here, that's very good. If you bought here, that's very good. But for some reason, let's say that you are looking at the market when the price is here, we cannot buy this market now. After this huge consolidation, after this breakout, we cannot buy here because there will be a pullback. and those pullback happens because of the imbalances and efficiencies, the orders that the institution have to close. They are negative orders that needs to be closed. That's why they are bringing this market back to this and coming back to this imbalance. And right below this, there is an order block which is formed by the last down move candle before this huge up move. So what is the situation here? Here, if the price goes below this like this, that means this consolidation means nothing. Means this will be a fake breakout. If they do not want to hold this order block, that means prices coming all the way down to here or maybe even lower here. So that is why if you have seen my setups on a small time frame, I set my stop loss very tight, because if they break that structure on that small time frame, temporarily they do not want to hold the prices or they do not want to go higher. So this is an invalidation point for me right here. This order block is also an invalidation point. That means if the price fails to hold this block, it means they are not interested in this move. They are not interested in moving this market higher. Maybe they want to push it down lower, even lower, or completely reverse this market. So that is what we look for as the shift of structure that we will combine later. So, but for now, the very basic idea of placing your buy order is to simply wait for that price to come back to your order block. And then where can your first target be? It can be either this high or this high. So now, when in this situation, since price is already moved up and also respected this is a liquidity point. That means there are orders here above here. So this liquidity points means the price would want to go and grab those here. It may be moving higher or maybe coming down, but the natural area the price should go is this high right here. And this is a protected area. That means the institutional wants to protect these lows at all costs. If they are not protecting this, if the price even wick this a little bit, that means they are not ready to move this market higher. So let's see how it plays out. Do you notice where the reverse came from? The imbalance area, exactly. It did not reach the order block necessarily. So here the order block can be this whole block also, okay? This whole block. Generally, what you will see other people teaching about order block is this one, right? This move. But the very last candle can also be the order block. So that we will do later when we classify more, when we dig deeper on order blocks. But this is just an intro, just a basics. So you see that this was taken out. This imbalance was fulfilled here, and now they are reversing. So what do we see here? Like I mentioned before, I didn't know that where this market is going to go, but the expectation was that if they're not holding this order block, but the good thing is, you see, you had a very good opportunity here. You had a very good profit here if you bought here. So they always give you some setup when you have a proper order block. And also, if you had the strategy to the criteria to the setup for buying, for if you have that setup for confirmation, if you can look for confirmation, then you will know when to involve and when to stay away. If you didn't find, if the market just come crashing like this, if the market just come crashing like this to this order block, there's no reason for us to buy here. That is why we need to look for confirmation for buy. That we will cover later, but this is basically what it is happening. So here we got a confirmation, and I have given you that it may do like this, or it may come fulfill this either imbalance or this order block and then moves down. So here the second one is happening. It came to here and it is moving down, and when it's moved down, they are no longer interested in protecting this order block. That means they are either going for a lower price from somewhere from here. So here, where is the order block? If you can guess, where is the order block here? If you can see, the last order block was this small one, right? This one. But what do you see? This wick liquidated that order block. So now the order block for this one will be this last move. The wick itself is an order block, or you can take the whole block. The whole candle you can take, or you can take just the wick. That's up to your decision how you want to refine your order block. But if you see, if you can take just the wick where it is trying to reverse from, where it is giving us a buy opportunity from that order block. So here again, we cannot be just buying because it has reached our order block. Who knows, it may come here, it may come here, or it may just go through. So we need to look for that confirmation. And where we will look that confirmation? On a lower time frame, because this is a higher time frame. We need to find for that confirmation on a lower time frame. What type of confirmation I do is Wyckoff. That I will share also after the end of this video. I will share where you can have a look on Wyckoff, where you can study, and as we go along, we'll share you how I place my entry criteria and stop losses. So here again, we can target somewhere. If we do get a confirmation here, we can target this order block. You see there is an order block, right? On this move down, where is the last move up before the move down? Here. And you see, before the move down, in the sense before they break structure. Here, where they before they break structure, where is the order block? Right here. Right here. Now I think this will be very interesting. The last up move or this one. You can take both. But what did it do? This order block was held again here, coming down. It broke the structure here. This order block breaking this structure. This order block breaking this structure. So what we can anticipate right now here is that we can either expect this may come and some kind of give you an confirmation for sale here and then moves much lower here, or if you don't find any confirmation, it can just go up and tap this order block here and then somehow move down, and also it can go up. We don't know. So let's see how it plays out. All right, perfect. So here you had a marked order block here, you had an order block marked here, so we didn't get any confirmation here. So this is why we need to look for that confirmation. If we simply sold here without looking for any confirmation, then, and even if we did without stop losses, then we are fried here. Same goes here. We didn't get any. So this imbalance was fulfilled, if you see earlier, but this order block was never fulfilled. This order block was never given any chances. Finally, it is stepping into that order block. And if you confirm this on a small time frame, this move alone on a daily time frame, you will be getting some pips, huge, some good pips you might be getting from somewhere from there to here. It's like 150 pips. So this is how we use order blocks. And if you notice where the price is moving, it came to this order block right here, and where it is moving up to this imbalance, it did not get the chance to move up to this order block. So, and where it is coming down to this order block, and where it is moving up to this order block. So price moves from order block to order block where there are orders. That is why this is called an order block. And and what it helps us, imbalances and efficiencies that was created will help us to move that order block. And and this bias that this will be going up or going down, all this will depend on the structure, on the overall structure. Show you something. See where price broke this consolidation, and why we didn't know why it was reversing from here. Why the price was reversing from here, we don't know. But if you use your structure, if you see your structure, if you see your chart, see there, we can even just, why I took this whole area, because this whole area is an order block on an even higher time frame. But if we take only the last order block, that is the last up move before this down move, then this was it. This is the candle, right? And let's see if that was fulfilled. Yeah, exactly. And why it is coming up here? Because there are orders, there are order blocks. So now you can see that price is moving. What it is doing, it's just moving from orders to orders, order block to order block. You can find it anywhere. So if you guys understood this, I will be sharing some very interesting setup where you can enter the market just looking at on a very recent structure. You can actually build up an edge over this. But I hope you do understand this that we have gone through so far. Guys, I think it will be enough for today for basics on this, because if we go much deeper, I think we'll get to the point of confusion. Let's discuss what we have done. You can ask me questions. You can ask me if you have doubts. And next session, I will share about your entry criteria.
Hi,
Next
Olympus.
session, yeah.
Hi, Olympus. I just have, I
Uh,
checked with you the number of trades which you have taken on order block basis.
mm.
How many times price has reversed despite having a breakout structure?
I have no idea, bro. Okay, let me just show you with an example.
No, no. The trades which you have taken, I'm asking.
Okay, my trades.
Yes. Let's say,
Mm.
because what you are explaining is amazing. It's a very good stuff which you have explained. But my
Mm.
curiosity is that based on this, when we are looking at break of structure
Okay.
and the price goes below OB,
Mm.
then in how many cases, despite break of structure, the price has reversed?
Okay.
Like,
That that entirely depends on the overall structure, on the higher time frame structure. But
hmm,
if you are suppose I'll just if you are looking on a, let's say, on a 4 hour structure, right? Let's say that this is a 4 hour structure. I'll just show you. Okay. I think I
sure, thank
should
you.
go with with the structure next time. So here, let's say that this is a break of structure, right?
Yes,
Here, this move is a break of structure. So what you are expecting is that this can be an order block also. This can be an order block. If you move down to a small time frame, you will come to a point when you practice enough that you will see this is an order block. So what we can do is see it gave you a buy setup right here, right? It came to this order block here, and it gave you a buy setup here. But once it breaks down, it does not reverse. So what you are asking is how many time of the case it can reverse, right?
yes, yes.
So exactly, we need to look at the bigger picture. So there is another order block right here. So price is definitely going to come here. Even if we want to
Yeah,
reverse
right.
here, it's going to come here. It's going to fulfill this imbalance before moving higher. That is why once this break, you can start for selling opportunity into this order block. It does not matter. Your bias should completely change from once it broke here. Your bias is that even if it goes up, you will be looking for a sale setup into this order block, into this block. So even this block had no chance. It just break down completely. So where it went to this order block. Do you see this order block held perfectly right here?
Yes, yes.
And it came to this area. This area can be marked as this whole area, right? This whole area, this can be an order block. This can be an order block. My point is, your imbalance is still here. If you meet this, you are fulfilling the imbalance, right? So this wick till here can be your target if you bought on this wick on this order block. But since it is also coming, since it broke here, right here, what is the expectation now? The expectation is it's coming for this order block now. So this expectation is it can be coming like it can be coming like this, or price can go like this, or there is also an order block right here. If you see, there is an order block that was never filled. So price can easily come up to here and then move down or do this, or price can just shoot down like this. Price can just drop like this. This is Euro USD present scenario, okay?
Yeah,
Euro USD present scenario right now. So in order to anticipate all of this, we need to have an idea about the structure, how the structure is moving. So let's just analyze Euro USD for now. I'll just delete everything. This is the monthly chart. Where is the recent?
Olympus, Olympus,
Yeah,
can I
yeah.
can I request you to open the CAD JPY chart because it will have
Okay,
reference to what exactly we are talking.
okay. Okay, this I have this, so we'll look somewhere here. Okay, so let's just look at cat JPY. What's happening? Where is the last order block here in this chart? In this move right here, right? If you see,
Yeah. Yeah, at the bottom.
yeah, at the bottom, and at the top, it's here. This is
Yeah.
going to be. This is going to be this
And
one.
last.
This is a bit. You might find it not applicable with what I have taught about choosing the last up move and all that. This will come with practice. But now the order block is not going to be this one or this one. It's going to be this one. So this will cover in the later sections. I cannot explain this because you won't understand at the moment without having gone through all of the things. So the recent order block is going to be this one for sale right here, and this for the buy here. But if you start to see in between, there is also an order block here, there is an order block here, right? So what can price do here is, if this comes right here, we can look for a confirmation here and to go up back to here and then move down and move something like this.
Yes.
Because why are we looking for this up, this into this? Why? Because there is an imbalance right here, and that is what it's coming to fulfill. That imbalance is going to come, and since there is an order block here, it may very well tap into this and then gives you a buy into this order block, and then it may completely block from here. But for me, I would be looking for this to come back right here. Either this one or this one, I would be looking for it to come back here. Because this move, it did not break this structure. It
Yeah,
needs
that's
to
why I
break
asked
this.
you.
Yeah, it needs to break this structure. But this move, what it did, it broke the structure here. This is on a daily time frame, right?
Yeah.
This move broke the structure here. So this is until this price goes below this order block, until this price action goes below this point, we are bullish on this overall. As a swing trading, we are bullish on this. What happens in between, it does not matter if you are trading swing, right? So
Yes.
here, this is already in bullish move, but see the movement it has created here. It has given a decent pullback, and now do you see there is also a break of structure here below?
Yes. Yes. Yes.
So if this move would have break the break of structure here, then we can anticipate somewhat. If this was the case like this, then we can anticipate this move like this. But since it did not break this, there is a very possible chances that it may come for this order block right here. It may come for here, or it may reverse from right from here. That we don't know how it will go. So that is why we will just set up a bias that if this price on this very range, if this price come here, we look for a buy either here or here. If not, if the price reverse here, we will look for a sell opportunity here into this order areas, because there are imbalances left here, here that needs to be fulfilled. So with the idea of this structure, we have an anticipation of where the market might be going. So with that idea, we will be anticipating the order might held or not. So I will simplify this on the next class, because this, if we wait for the best scenario right here, would be what would be to wait for this. If this come here, it's very 100% sure that it's going to give you a setup somewhere like this for a buy for a few to 100 200 pips. It's guaranteed that it will give you, but we cannot wait for this setup because it's going to take days and days. So what we can do, we can just move on to 15 minutes, and there we can just find our entry criteria, just like what we did on the daytime. Where is the nearest order block? So here there is a one order block right here, and there is a one order block right here. I'll just give a rough idea. So what was our expectation? Our expectation is that price will first come to this area, right? This area. And if price moves up somehow, then we'll sell from here. That was the idea. That was the bias we had. So on a 15 minute, what you do is now you have areas that you have marked. So since you are expecting price this to come here, you can look for sell opportunities when it come here like this. And if it even comes up here, you can look for sell opportunity like this. If the price is coming here, you can look for buy opportunity. If it comes here, you can look for buy opportunity where? To this first order block, and then move to the second order block, and then up to here. Like that, we can build our bias, because we have already have the breakdown here. We have a first break of structure here, and we have a break of structure here. Where is this break of structure coming from? This order block. Where is this break of structure coming from? This order block. So it's very possible that when price comes up to this area, to either this one or this one, can come here. So that is the bias that we build. And with that, we can just go on to smaller time frame again, and we can find the same setup, the same expectation that we have here. We can just go to 1 minute maybe. The same thing here happening. The break of structure, and there is an order block here. So those things that we can look for. But this order block, and here everywhere there will be order block, but we won't be considering those much because we have already marked our time frame, higher time frame areas where we are interested to buy or sell. So we can just look for we can just wait for price to either reach this area or this area. And if you are sure on this, if you're sure on this, on this order block, what you can do is you can also anticipate that price will come here and move down. So here it's very risky because this is an 1 minute order block. That means there is very less orders because of the small time frame. Why most of the bigger structure held is because there are multiple and multiple of orders, because this is a big time frame. But here, since this is a 1 minute time frame, there is a very less order, and this may or may not hold because we are also expecting the price might come here and then dropped. So it may or may not hold. So that is when it comes about confirmation your entry. So in 1 minute structure, you cannot confirm here. So you will need to move to either 5 seconds or 1 second to confirm your entry. So this is why, this is how I use the time frame. So I know, guys, I think we'll wrap up here for today. This must be very confusing at first, but once you give a real thought. Just have a look of, even on YouTube also you can look what is order block and what is imbalance and all that. And then if you have a clear understanding, because I don't have much experience of sharing and explaining, so with over time I think I will get better also. But for time being, you can also use your reference on your friends or YouTube's or whatever, and just look and try to grab the knowledge, try to understand what it is actually. And once you do that, and the things that I will be explaining, because these things you can read, these basics you can read online, YouTube, wherever. But the entry criteria, how to set up your, how to find your probable buy and sell setups, how to use any time frame anywhere in the market, those things matters. So, but for that, you have to understand all of this at first. So just try to look all of this. And if you don't understand, feel free to text me personally or on the group. You can drop a message. We'll try to explain. If necessary, we'll put up some pictures and all that. So if you guys have any questions, I think you can ask me, because we have some time. Otherwise, we will wrap up for today. And I will share you a strategy next time where you can just go onto any time frame, and then you'll just draw up an order block, and then you can find an entry criteria and go for buy or sale. Very easy. So like on a 15 minutes, you can just find, for example, on this, where is the break of structure coming from? This order block. So when the price comes up here, we're going to wait, okay? We're going to wait for this to come here, and then we're going to sell. So that's a very, very easy strategy, and it works most of the time. I'll just show you a quick example on CAD maybe of what I'm talking about. So here, we'll just start from here, okay? Let's see. Where is this break of structure? Break of structure is the recent high or low is being broken by a move. That is what we call break of structure. And that is what some of the smart money trader, they refer to as that change of character, CHO, that CH something. So it doesn't really matter. You can just represent ABC as how you understand it. If you understand that this is a break of structure, you can name anything. It does not matter. So here, the break of structure came from this area, right? So you can just mark this whole move like this. You can just mark the whole move like that. Since this is the break of structure, this is the whole move. And where is the order block? Order block. Try to find the order block somewhere in this between. And when the price comes back to it, and most of the cases it will come back, and then you find the entry criteria and go and you target this high. This is a random chart that I picked up, and if you see, oh my god, it does exactly fulfilled what I have been explaining. See, break of structure, this box, this high we take, we waited for it to come back to this order block, and then we target this high. Bang. Same, we take this high, we come back for it to come to our next order block here, and we target this here. Again here, next we'll do that. Here it didn't, we might have failed. So that is why we need to look for confirmation. Same thing, once it starts to break down, we'll look for something that breaks down here. So here, this impulse move, and we would be waiting for price to come back. It never did. So it just moved down. It break down here, break of structure. So there is an order block right here. And then when the price comes back, we'll be targeting this high. Sadly, we would have missed this trade, but at next time when it comes back, we would have got that.
Olympus,
Yeah.
I think you would be very happy to use CAT JPY now, because that's what exactly is showing what you have been explaining.
Bro, Give you can give any pair. This will happen everywhere. Stocks, cryptos, everywhere.
No, no, just kidding,
So
bro.
that
Just kidding. Thank you.
no, I understand, bro. I understand, but what I'm trying to say is, we don't need to look all hundreds and hundreds of pair. You can just pick anyone that you like, that you want to analyze, even news and everything. Because analyzing every country's economic data and news sometimes it becomes very difficult. Other than gold, even gold will follow, but gold is too volatile and the spread is very high. So I don't engage much with gold. But I'll just show you. Even in gold, it does follow. Okay. Just take gold. So we have a break of structure here. So this is the move, and the other blocks can be one here and one in here. So we got it. We gave it some wow. And here we have a break of structure. So this is the whole move. So we'll be waiting for price to either come back to this order block or either to this last order block as per how you refine. And then we target this high. Boom. Like that. This is a very one easy way just to find setups. On you can do this on 5 minutes, 15 minutes. You can just find the areas that you're interested. Break of structure, this line. We look for a buy on this order block. See, we have a break of structure here, and this is the move. We wait for it to come back to the order block. It did, and it gave you some kind of a profit before it finally fails. But it always gives you. So we cannot just simply buy here because it is coming back. So that's when you have that entry confirmation. With that, you can target this high first. You take your partial, the rest you can BE. You can target this high, and some hold, and eventually this would have given you something here, but then got you at BE. So like that, we can do, even if you see on a bigger time frame, this order block, it break the structure here. So this is the move that you can say, and we have anticipated that it may come to somewhere this order block, which we never got until here. We got it or here, and then just moving higher. So those things that you have marked, those order blocks that have never been tested, those are very good areas for buy or sale. So we'll cover this with a proper explanation about this theory. And if you are looking for a structure on a 15-minute, on which time frame you look for confirmation on all those things, we'll cover later sections. So for now, if you're interested, you can look for this on Google, the Wyckoff it's composite. SIT. The Wyckoff composite, man. I'll just show you. Okay, it's not there. So the Wyckoff composite, man, you can just look for it. Or it's also available on YouTube. Just look for Wyckoff composite, man, how it works. There you will see all the things that I used to mark, that selling client SC, that PSY, LPS, TES, UTAT, Spring, all this I used to mark. You will see all of those, and those are your entry criteria. Because everything, I'll explain in the next session, everything that is happening here is Wyckoff. Because Wyckoff is generally what? Accumulation and distribution. So what is happening here? Accumulation. What is happening here? Accumulation. What is happening here? Accumulation. What is happening here? Distribution comes distribution along with accumulation happening here. So what is happening here? Distribution. What is happening here? Accumulation on a small time frame, which we are not able to see here. So what's happening here? distribution is happening here, and accumulation happening here. Distribution, accumulation, distribution. Everywhere is Wyckoff. So we do not trade everywhere. So we will find our, Rishi was talking about our POI, point of interest, area of interest. So we will only look for Wyckoff where we are interested, where the areas that we are interested, and those areas become our confirmation for entry or buying or selling those things. So guys, I think we'll be done for today. I hope you get something out of this. If you don't understand, we will go again deeper on the next class. And if you have questions, just drop in the group, or personally you can text me if you're not comfortable. So we'll go deeper.
Thank you, Olympus.
Thank you.
No problem. You're welcome, guys.
Thank
Have a
you,
good day.
Olympus.
Yes, sir.
Thank you.
So guys, you can ask in group.